Foundation Day. Good people to bank with.
All right, welcome back. You're watching Indian Open. The headline inflation number has stayed well below the RBI's target for some time now. So technically, that gives the Monetary Policy Committee room to cut rates. But core inflation numbers suggest otherwise. And it's not just the rate, it's also the policy stance that's equally crucial this time. And there is a new member on the committee as Urjit Patel made way for Shaktikanta Das. So there's a lot that's riding on this policy. Joining us now to talk a little bit more about the possible outcomes is Siddhartha Sanyal of Barclay. Siddhartha, thanks very much for joining in. So let me begin by asking you, what is your expectation? I mean, while we're talking about a consensus with regards to a change in stance, it's still a split in the middle on whether or not a cut might actually come in.
Indeed, it's a close call this time. And we think a change in the stance from back to neutral is pretty much on the cards. The call on rates is not that easy. And our sense is that going by a set of pure economics logic, staying slightly more conservative possibly makes more sense at this juncture. 2-3 reasons. One, you are absolutely right in pointing out that the headline inflation right now is towards the lower end of the RBI's target band. But we think in the next 6 odd months, this number goes back and settles in the 4 to 4.5% zone, which is more likely a zone which the RBI wants it to be. And that suggests that RBI to stay on status quo. The other thing is, while a set of market and macro parameters have eased quite a bit in favor of a cut over the course of the last few months, at the same time, political risks have actually increased significantly. And that leads to a situation that 2-3 months down the line, when we actually see come closer to the election season, in case of any pressure on the currency, RBI possibly will be in a better position to manage the currency at that juncture if they maintain a slightly more cautious and conservative stance at this juncture. So overall, our sense is that from a set of pure economics stuff, it possibly makes more sense to stay on hold and stay a little more cautious at this juncture. But we admit that this is a very, very close call, and chances of a rate cut has actually increased a bit over the course of the last couple of months since the December policy.
Some are of the opinion that you'd rather take the policy cut in advance. I mean, why wait out for that period? While the RBI has always said that they are looking for data points and they're always in a wait-and-watch stance till they get more information. But in the last policy, already indications came about that while inflation has its soft points, but so does growth. So in order to balance the two, do you think it would be prudent to, take a cut in advance?
Well, if you talk about the growth inflation trade-off, growth numbers are still in the north of 7%, 7 to 7.5% zone, which is the stated preferred zone of the RBI, and I think justifiably so. I don't really think there is too much of a risk for the full year as a whole. To slip below that particular zone of growth. On the other hand, our sense is that monetary policy needs to be forward-looking, and it influences inflation with a bit of a lag. So if 6 months down the line inflation forecasts are to the north of 4%, it doesn't really make the case very, very strong. But again, I'm repeating, this is a pure economics part of the logic. There is a bit of the push from some of the other sides seem to be pretty strong. Several senior politicians have actually opened their mouth very clearly in favor of softer rates of late.
Yeah, well, let's see if that happens. The only problem with that would be that if you are in a tightening bias and then you cut rates, you're telling the markets that effectively don't believe me or don't believe my bias. Jayesh, Mehta of Bank of America, Merrill Lynch coming in on the topic as well, and Siddhartha made some very important points, Jayesh. But just wondering, the argument against cutting the rates this time around, amongst many others, would also be the stance? I mean, would you believe that there is room for the Reserve Bank of India, even if it believes that cutting rates is the right move right now, to take a pause, indicate a change of stance, and then cut the rates in April, so that there is no way that the market believes that the RBI goes against the stance that it has adopted in a jiffy? It's taking a measured approach. Would that be more prudent, even if the Reserve Bank believes that it's time to cut rates?
I think we have precedents in the past. You see, a stance is a judgment made at that point of time, right? And if you really look at it, when we changed the stance, what was the scenario? Your oil price was 85. Most of the research houses were talking about 100. Even currency was tremendously under pressure. And growth was not so benign, or it didn't soften a lot, right? I think, so at that point of time, taking the stance is fine. And even when in past, I think I remember once we had in past where you have softer stance, and suddenly if the oil spikes or something happens globally, you are not going to stick with your stance. So there is something which is happening outside or something which is happening dramatically. So if you really look at our headline inflation, right, that's really fallen sharply off the cliff than what it is what was projected to. So I think then even the earlier governor Urjit Patel in his last press conference did say that, yeah, if there is data does not pan out as we thought, there will be room. So changing stance, I would say, would be a right thing to do. I don't think, but yes, people are right now stuck up, and that's why everybody feels that rate cut would be the right thing. But because the stance is tightening, they would not, really do it. But I think the numbers have changed dramatically in all the three fronts, right? Whether it's oil price, whether it's inflation headline, or whether it is growth. I think. Of late, of course, the actual document which has been signed does look at inflation and growth. So from that perspective, I think there is very high probability of rate cut. Now the question is whether it's 25 or 50. Nobody talks about 50, but if you really look at it, things have really changed from the first rate hike which we did 8 months back. Everything is benign. So. Why don't you reverse that? So maybe that's also an argument. But yes, people do talk about core, and we can elaborate on that.
So if it is 50, then we know who to call for a quote, because Jayesh Mehta believes he won't be surprised if there is a 50 out here. Siddhartha, the other point is what the global factors do to this, right? One is, while a lot of chatter around what happens to the oil policy in May, I think a couple of research reports seem to suggest that India will be given the waiver. India and China will be amongst the countries that will be given a waiver in May as well. So that will not be a problem. And the Fed, if anything, has opened the doors for some rate action as well. Janet Yellen was on record yesterday saying that she also believed that if indeed the growth slows down further, then the Fed will actually go ahead and cut rates. So is that global factors also aiding the argument for a rate cut?
The global factors are really helping towards turning the RBI a little more, allowing the RBI to move on to a more zone of comfort. The way at this moment, the way things are panning out on the global front, growth indicators, etc., it looks like it's a phase of benign softness, which is a very good scenario for India, because at time of strong risk off, we see possibilities of capital outflow. At times of strong risk on, we see possibilities of commodity prices going very strong. But I think overall the current situation of benign softness is actually favorable for India, and that's a clear positive.
Jayesh, while we're talking about the trade-off between growth and inflation, and while inflation continues to remain benign, overall economic slowdown is pretty evident. You have the industrial production numbers at a 17-month low, which came in the month of November. Your rural demand, your auto sales, your airline traffic data, all of them suggesting that there is a little bit of a slump here. And with the RBI suggesting that they need to take appropriate risk management policies in time, whether or not it wouldn't be such a bad idea for taking that kind of a rate cut. While Siddhartha obviously believes that the growth numbers are within a comfortable range and within the targeted range of the RBI, that's not something that you probably focus on as of now. Would you agree or disagree?
Yeah, but you see, the growth number is again projected, right? So whatever we are seeing the numbers, yeah, you may still see 7.2 growth number coming in, but at least the data which we have, last quarter data, and this year, this quarter, we have to actually see how it pans out. But very clearly, the momentum is slower. And coming after the data, it doesn't matter. So from that perspective, there was some stimulus required. Government's doing so much for that, and from that perspective, I think your basic headline inflation is supporting that, right? It's at sub 2.3, 2.2%. Yes, one can talk about core. Core is something one looks at it. Whether that will filter it into the headline inflation or not. Both are divergent, right? One is food's excess supply, and which is not going to change in hurry in next 6 months or so. So you require structural changes for the food excess supply to really change that trajectory.
Jayesh, what are bond traders watching out for from the policy?
Okay, so we did a lot of survey. I think as of right now, 75% are expecting just the stance change. 25% are looking at 25 basis point. So that's where the bond market is priced out. But bond market is pricing maybe very differently. They're saying stance change, and like between now and April, 25 basis point rate cut. And I personally don't really look at that way. I personally think market would be surprised.
So that's just one last comment from you. And, with regards to the budgetary announcement and the fiscal math adding up, will that sort of play up in the decision-making process?
Well, at this moment, there are two aspects. The deficit optics are pegged at a zone which is not too much of a discomfort. There can be some questions about whether some of the revenue assumptions are slightly more optimistic and aggressive. But I think that will be examined more closely only sometime in July when the full budget is presented. At the moment, we'll be taking the fiscal deficit numbers in face value. Though one interesting aspect here is, in the budget, there are schemes which are focusing more on the rural segment, talking about cash payments at the lowest strata of the economy, which is actually in case of that particular strata, the consumption propensity is very, very high. So once the money is actually distributed, it adds to inflation to some extent over a period of time. But I'm not really emphasizing much on that particular aspect. What I am concerned about, particularly on two things. One, that if monetary policy needs to be forward-looking, we should not emphasize too much on today's 2.2. We should emphasize more on what is in store for inflation numbers 6 to 12 months down the line, which is more in the 4 to 4.5% zone. So that doesn't suggest a rate cut in a hurry, number one. And number two is, given the political risks have actually intensified over the course of the last few months, if there is more pressure on overall financial stability and currency stability, in particular in the second quarter of the calendar year, a rate cut now prior to the election will complicate matters a bit more for RBI at that juncture. So it's a question of whether you, ahead of the election, you stay a little more conservative, or even as a central bank, you turn a little more risk-taking.
All right. Got that. Really enjoyed the discussion. Siddhartha as well as Jayesh, appreciate both of you taking out the time and joining us in this discussion ahead of the RBI policy.
Well, the markets seem to be doing okay. The banks maybe not as much, but time for a quick break. On the other side of the break, we decode the December quarter earnings of Cipla with the CFO, Kedar Upadhyay.